Dear students, welcome to another exciting class of economics. We will discuss all the long questions of Chapter 4. I hope you have understood the concepts in Chapter 4. So let us start. The objectives of our today's lesson are to explain the basic concepts of economics, to write the answers of all long questions of Chapter 4. The first long question in the exercise is: define national income and differentiate between GNP and NNP. You have to write the answer in this way. Now a very important term we are going to study, that is the income of the whole economy. Income of all citizens of the country. That is national income. National income means the value of goods and services produced by a country during a financial year. Thus, it is the net result of all economic activities of any country during a period of 1 year and is valued in terms of money. National income is total amount of goods and services produced within the country during the given period, say 1 year. It is the total of factor income from wages, interest, rent, profit, received by factors of production, labor, capital, land, and entrepreneurship of a nation. What are the factors of production, students? Yes. Land, labor, capital and organization or entrepreneurship. Now we will discuss that what are the basic concepts of national income. Following are the basic concepts of national income. Gross national product, GNP. Net national product, NNP. Gross domestic product, GDP. Personal income, PI. Disposable personal income, DPI. So what is the difference between GNP and NNP? Gross national product, GNP, is total value of all the final products. And net national product is the total value of national goods minus depreciation. The second long question is: what is meant by consumption in economics? Explain in detail. My vibrant students, now we are going to start another interesting topic called consumption. Consumption is a word derived from consume, which means to use anything. The purchase and use of goods to satisfy the wants is called consumption. We eat food when we are hungry and we drink water when we feel thirst. Consumption is closely related to income. If a person has more income, that person will consume more. More income, more consumption. Less income, less consumption. Production also leads to consumption. If production in a country is more, consumption will also be more. Consumption can be called your daily expenditures. My dear students, when we use or consume any item, its utility varies. Few goods provide long-lasting utility, or we can say can be used for a long time, and on the other hand, the goods and services which are needed again and again have a short-term utility. Few goods have long-lasting utility. Examples: car, clothes, shoes, mobile phone, tables, chairs. These things are not purchased on daily basis. While few goods have short-term utility. Examples: water, food, newspaper, tea, coffee. Long question number 3 is: explain savings. Elaborate the factors affecting savings. Dear students, what do we mean by savings? This is a very common term which we use on daily basis. Savings is the money a person has left over when they subtract their expenses, consumption, from their income over a given time period. Savings are must for future. Saving is the excess of income over expenses. Or savings can be called surplus income. Surplus means extra money. You will understand the concept of saving by this example. If a man's income is rupees 40,000 and his expenses are rupees 10,000, his savings will be savings equals income minus expenditures. Savings equals 40,000 minus 10,000, so the savings will be rupees 30,000. Dear students, there are two factors which are responsible to create savings. The first factor is will to save and the second factor is power to save. So what is will to save? Will to save means the intention of a person to save. If a person is not willing to save, he can't. A person can only save money when he is responsible. Saving is must for unforeseen expenses, so everyone must save money. On the other hand, power to save means the capacity of a person to save. If a person has high income, he can save more. High income people have more power to save. Long question number 4 is: write notes on the following: consumption, savings, investment. The formula of savings is income minus expenses. Expenses include your total consumption from your income. Thank you, students. Write the answers of all these questions in your neat notebook.